All right, good morning and welcome back, everybody. Welcome to the GoPro Mentorship, held every Friday and hosted by EQ Markets Global, your number one financial and educational brand in Nigeria. All right, that is building a community of consistently profitable forex traders and investors in Nigeria and across the world entirely. I'm super glad to share this moment with you guys. You know how we do it every single time, right? I'm always delighted to share moments like this with you because they mean a whole lot to me, apparently. Okay. Moments like this mean a lot to me. You asked for it, you asked for a mentorship session, and you have it now. So we have only 1 hour to spend here. Apparently, we've used 5 minutes of that 1 hour, and I don't want to exceed 1 hour because I want to keep it simple and short. Okay, that is keys. Keep it simple and short. So last week we started looking at market structure, all right, and I took you through the basics of market structure. I took you through the basics of market structure that last week. Let me take these out, okay? So I took you through the basics of market structure, and I told you that last week that we have three basic types of movement or structures in the market, okay? Three basic types of movement or structures in the market, and of which the first one we look at was the structure of higher highs and higher lows, okay? Higher highs, higher lows, higher highs, higher lows. Okay, now this is a symbolic structure because this is one of the major pattern that the market moves at. Okay, creating higher highs and of course creating higher lows. Okay, by the way, forgive me if you can all hear me. Please let me know in the comment section that you can hear me. Okay, let me know in the comment section that you can hear me. If you can all hear me, please let me know in the comment section that you can hear me and you can see my screen. So just simply type in the comment section loud and clear. Okay, simply type in the comment section loud and clear. All right, simply type in the comment section loud and clear. Type in the comment section loud and clear just before I continue. All right, type in the comment section loud and clear. Type in the comment section loud and clear. Just type in the comment section loud and clear if you can hear me. All right, once I get all of you typing loud and clear, I'm going to continue. Okay, but I want to see everyone that can hear me. I want you to type in that comment section loud and clear. I want you to type in that comment section loud and clear. Okay, type in that comment section loud and clear. All right, so beautiful. Everyone is typing loud and clear. So we're going to continue now. All right. So like I was saying that last week we were looking at we looked at the very basic of market structure. Okay, the very basics of market structure was what we looked at last week. Sorry, I'm trying to move this. Yeah, beautiful. So we were trying to look at the very basics of market structure last week, and we said that the market moves only in three ways. Okay, only in three ways. It's either it is going all the way up, it is coming down, or it is being choppy. That is, it is consolidating, moving within a specific high and a specific low. When it is going up, it has in its nature the potential to continue to create higher highs and higher lows. Take for instance here, we see that this high here, right, is higher than the previous high that was created here. Okay, and then this next one here is higher than this other one. As much as it is creating higher highs and higher lows, it is as well creating higher lows. Okay, as much as it is creating higher highs, it is also creating higher lows. Okay, higher lows. You can see that it simply means that from here, apparently the next move we will probably be expecting is a move to the upside. Can you see that? Can you see that? Now, this is for a bullish move, and we can define this as a structure. First, what is structure? What is the layman understanding of structure? Structure is what? Behavioral pattern. Structure is don't think when they mention market structure is one very big. It's not big. It's not one mythical kinikon. No, it's not. Okay, it's not one mythical term or whatever. Structure simply means behavioral pattern or designed plan. Okay, so when you know that in the morning, if you wake up, you're heading straight to the kitchen, you fix one or two things, you come out, you head straight to the bathroom, or maybe you wake up, you say your prayers, head to the kitchen, fix one or two things. The next thing is you're heading back into the bathroom, you come out, you dress up, and you're rushing off to work. Like, this is your typical lifestyle. It becomes a structure. Okay, it becomes a structure that, okay, this is every day you have to wake up to go to work, you have to take your bath, you have to put on clothes, and then you have to eat the road. It becomes a pattern, it becomes a designed plan. That is what we call what? Structure in Forex. So when we are saying market structure, we're simply talking about a behavioral pattern in the market, or a planned and well organized or repetitive design that continues to happen in the market. I don't know if I'm making sense. See, I want to break this down to the point that even a 2-year-old baby would understand. Okay, that's what I'm trying to do. I want to break it down to the point that even a 2-year-old baby would understand what I'm saying, so that we will be on the same page together. So for the structure, for the elementary structure, okay, the elementary market structure we can find trading Forex are only three. And for these three, if we understand them, they form the solid basics, they form the solid foundation on which every other ones that we would learn that will be built on, every other ones we will learn will be built on this elementary one. Okay, so like I said, the first, don't forget, is the bullish structure. The bullish what? Structure. The bullish structure is where we see some clan of people decide that they want to push prices to the upside, but because they are not the only ones existing in the market, when they try to push up, they are going to apparently face some form of resistance, which will push prices below, and then they will push prices again upward. So because they are the strongest at the moment, they are the dominant people at the moment, they are going to prevail. But then we are going to be seeing things like this. All right, this movement from this point here to this point here, this movement from this point here to this point here, or this movement from this point here to this point here. This is what we call what? Retracement, because the buyers cannot by themselves be able to push prices all the way up. You can never, market can stretch, okay? Market can stretch, but you can never see a market that can stretch for too long. It will definitely be broken, okay? Because they are not the only ones that will be in the market. It will definitely be broken. Definitely be broken. And so you're going to see, after the stretching, you're going to see a moment that is being observed for retracement. people cashing out profit, and people doing a whole lot of things within the retracement. Okay, now if we understand this structure, I'm going to be explaining the second structure. This is just a recap of what we did last week. Okay, this is just a recap of what we did last week. Now, in the second structure is the bearish structure. The bearish structure is where we see that the utmost direction of prices is downward. And so when prices is moving that downward, it continues to create what we call what? A lower highs and a lower lows. That is the structure of the bearish market. Okay, that is the market structure for a bearish movement in the market. So we see a high that is being formed here. Okay, we see a high that is being formed here, and then a low, but the successive highs and successive lows becomes what? Lower than the previous highs and previous lows that are being formed. Okay, so we have this next swing high. Apparently, this next swing high is what? Lower than the previous high. And then this next swing low here is also lower than the former one. And then, of course, you see that the market is creating another low, but this low is what? Lower than the previous one that has been created. It simply means that this is no other than what we call what? A bearish movement. Okay, now we also have what we call the choppy market. CHOPPY. CHOPPY. That's the choppy market. The choppy market is when prices decides to move within a specific high and a specific low. Okay, prices moving within a specific high and what? A specific low. All right, I'm going to give you this wonderful example, even if I'm not a good artist. Okay, I'll try my best to give you something you would understand. All right, now watch this. You can most times see prices moving in this kind of manner. Here we are going to be calling it what? Specific high and specific low. If you notice carefully, price was carefully moving within this specific region. Okay, and also this specific low here. Can you see that? Price was moving within this specific high and also this specific what? Low here. Can you see that? So this is what we call the what? Shopping market structure. Now, everything that happens in the Forex market does not exist these three. Please follow me. It does not exist was these three. Bullish structure, bearish structure, and then the shopping market structure. Now, I want to tell you one more thing before we continue. Okay, before we continue, I'm not going to dwell so much on that because if you I won't be able to give you everything in one class. I want to quickly run to show you what I have for you today. Okay, so I want to quickly run towards doing what I have for you today. This is not what I have for you today. This is just a recap. So let me quickly clear all of this, then show you one more thing before we go ahead. What I want to show you, guys, is not a secret, but most people don't know. Even advanced traders, they don't know. Okay, even advanced traders, they don't know this. What I want to show you, many advanced traders, they don't know it. If you're ready to hear, okay, if you really want me to show you, please type in that comment section, show me. If I get 20 people typing show me, I'm going to show you this. If many people don't know it, I should be able to call it a secret, right? If many people don't know it, I should call it a secret. It's not really a secret, but it is clear that most people really do not know it. So if I see 20 people typing show me, all right, I'm going to show you that. All right, so let me count. How many persons have typed show me? Guys, you guys are so hungry for knowledge. All right, let me see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. I need three more. Show me. All right, don't mind me. Let's quickly continue. Now, most people find it very difficult to know. Listen, guys. Most people find it very difficult to know. Okay, now you have understood the structure. You already now know that, okay, if it is a bearish structure, prices will begin to print what? Lower highs and lower lows and lower highs and lower lows. Now, let me draw that again. I will just quickly show you this. Listen attentively. Listen attentively. This is $1 million knowledge. You probably may not find it easily anywhere. I'm not saying you will find it anywhere, but I'm saying you will not find it easily anywhere. Okay? Now, you will see prices moving in this manner, right? Prices moving in this manner. Okay? Now, okay, beautiful. Now, you see that prices is moving. You see that prices is moving, creating what? Lower highs and lower lows. Now, we've always been told, or we've always been taught, that the best way to take prices is the best re-entry strategy is to take what? Prices at this top here. True or false? True or false? That when prices is creating lower highs and lower lows, okay, that whenever it retraces back, this point here is the best point to take a sell. Apparently, this point here again, anytime it retraces, all right, this point here becomes another very good point for us to take a sell. But now the question is, how do we know? Okay, how do we know? How do we know that prices will come to this point? That's the secret I want to show you. How do you know the area? How do you know the zone where prices will retrace to before it begins to sell? Most times it's very difficult to know. All right, there are two concepts that personally I use. Oh my God, I want to teach you guys what I teach people that pay me $2,000 or $1,500 to teach them. Why? That's why I don't want to go on the mentorship program. You guys kept shouting and kept shouting and kept shouting. Ah, should I tell you guys this? I'm already teaching you guys $1,500 knowledge for free. Courtesy to EQ Market Global. So guys, if you're yet to sign up an account with EQ Markets Global, and of course with our preferred broker Equity, you are you're doing yourself great injustice. By the way, let me tell you guys, this is going to be the last free mentorship class I will be giving. Every other subsequent mentorship class will be exclusive to only people that have a live funded account and is trading with us. Not just having a live funded account with Equity, but we're going to check your records. If you've been trading in the last 1 week, then we would send you a personal link to join this program. Okay, because I cannot be giving to you what I'm giving to people who pay me $1,500 personal class or $2,000. I can't be giving it to you for free, and of course you are not doing business with us. That wouldn't be nice. Okay, so I'm giving you this super knowledge. I've been sharing great ideas with you guys on this YouTube channel, but particularly GoPro mentorship will be made private beginning from next month. Okay, beginning from next month, GoPro mentorship is going to be private, strictly to only people that have a live funded account and is trading with Equity. All right, we're going to be very strict with that. Personally, I'll be very strict with that because I can't be giving you this kind of knowledge for free. So do well to go to www.eqmarketsglobal. Okay, I'm going to type it in the comment section there. I'm typing it in capital letters so that you would see it. Just simply go to www.eqmarketsglobal.com. Okay, now sign up an account, get the account funded, all right, and of course begin to trade with us, and I'll be glad to show you many more things. Now let's come back. I want to show you the secret. Somebody just left, but I want to show you the secret now. How would you know that price will retrace into the zone before it begins to sell? Like I said, it's difficult to know, right? So the first method that I use to know the depth of retracement, the first method I use to know the depth of retracement is the Fibonacci. All right, I use the Fibonacci tool. The Fibonacci retracement tool is used to know the depth of retracement. Okay, it's called the Fibonacci. Is it called Fibonacci or Fibonacci? All right, it's called the Fibonacci retracement tool, the Fibonacci retracement tool. So I'm going to pick up the Fibonacci retracement tool, and that Fibonacci retracement tool will be able to tell me the level, the extent price will retrace into, and give me the exact area. It might not tell me the exact particular price level. Most times it does. Most times it does, and that's why we take sniper entries. Most times it does, but sometimes it will not tell you the exact price level, but it will tell you the price area where you can set yourself to take a buy or a sell trade. So supposing this is a sell trade, right? I mean a bearish structure, and I want to go on this bearish structure. I will simply pick my Fibonacci retracement tool, all right, and I will place the Fibonacci retracement tool to this top here, and I will drag it all the way down. I'll drag it all the way down to touch this bottom here. Can you see that? Now let me label it for you. Let me label it for you. Guys, this is $1 million secret I am telling you. Okay? It's $1 million secret I am telling you. Now this is level A. Sorry, I think this is too big. Let me try to reduce that size. Beautiful. So this is point A, right? This is point A. And then this is point B. Okay? This is point B. Guys, stop playing. I'm sharing $1 million knowledge with you guys. So this is point A, this is point B. Now, after I must have identified that there is a failure swing, okay? Now, what would I do? Price has moved from point A to point B, and it's currently retracing. Where is that point where price will retrace to? Then I would know that the retracement is enough. At this zone, I would sell. Okay, now I will pick my Fibonacci retracement tool and I will run it all the way from point A to point B. Guys, I'm not talking about this old drawing now. I'm only talking about from point A down to point B. Now, once I place my Fibonacci retracement tool from point A to point B, this will now tell me that the depth of retracement, it will tell me different levels, different price levels that the retracement can go into. Now, the three most significant retracement levels is the 50% Fibonacci retracement level, the 61.8 retracement level, and then also we have the 79% retracement level. Now, some people might use different price levels and many more. Everybody has his own specifics, okay, specifications that he wants to use. But personally, on my own personal study and my own personal trading, this is what I use, okay? So I will be looking for retracement into the 61.8 retracement level, between 61.8 and 79% retracement level. That is where I'm going to position myself to take a sell, because already I know that the market is going down. So I position myself around this area. Around this area, can you see this now? Most times it retraces even into the 61.8 retracement level. Just that level, it is going to tap and then begin to go down. Okay, so let me remove the Fibonacci now. Let me remove the Fibonacci. Can you see this area? This area that I marked out is between the 61.8 and what? The 79. Can you see that now? Now, let me show you again. For those of you that will probably not understand it, let's take for instance that, okay, let me still leave here as A. Now let me color here now as C. Okay, let me color here now as C. Beautiful. And let me also label here as D. Okay, let me label here now as D. Beautiful. So you see that if I had taken a sell here, because I understand the structure of the market, that it is creating lower highs and lower lows, I know very well that price will come to clear out this low here. Can you see this now? I know very well that price will come to clear out this low. So I might probably want to just put my take profit level here. This is how we do it. This is how we do it. So if I'm taking a sell trade around here, right? If I'm taking a sell trade around here, okay, follow me. If I'm taking a sell trade anywhere around this level, I'll place my stop loss a little above the 79% level. Can you see that? And then I will stretch my take profit level all the way down to this this B swing low. Can you see this B swing low? Now with this now, you will notice that you're reducing your risk but increasing your profit potential. If you just learn something, drop a clapping emoji for me. I'll show you more. If you just learned something now, drop a clapping emoji for me in the comment section and I will show you more. All right, so let's quickly continue now. Can you see this now? So this is exactly how we can find the depth of retracement. But I wanted to show you just one more thing again. So price got to D and took off to point E. But how would I know that this point E here, how would I know that this point E here is that level where I should be looking out for a sell? Again, pick your Fibonacci, okay? Pick your Fibonacci retracement tool, put it at C, and drag it all the way down to what? Point D. Okay? Drag it all the way down to point D. If you drag it all the way down to point D, again, we come again, and what do we say? We are saying that our best entry zone, our best entry level is where? Around the 61.8 or 79. Between that zone. Remember, I will not just enter the market. Remember, for those of you that know me, you already know I love confirmations. So even when prices come to 61.8 level or 79 level, I must find confirmation. Either price action confirmation, I must see a rejection candle on that zone. I must see a bearish engulfing or a bullish engulfing at that zone. I must see maybe a shooting star or a morning star forming at that zone. If not so, the easiest way is I would use my CCI, which is a commodity channel index, to find momentum, change of momentum or change of bias of momentum on that zone. That's what I would do. Those of you that know. So I love confirmations because confirmations will help me to reduce unnecessary mistakes that I'm supposed to be making in the market. Okay. Now let us continue. Again, I pick my Fibonacci retracement tool. I put it at C and run it down to D. It will now tell me the depth of retracement for the next swing high. Okay. And of course, you see that this came into 61.8 and the 79 level, right? So what would I do? I would simply pick up my I will simply map out that zone, because that's the zone I'll be looking out for what? A sell opportunity. Again, let me remove my Fibonacci retracement tool. Can you see how prices came nicely into that zone? Again, now what would I do? I'll pick my stuff and I'll place it here. My stop loss is going to be a little above that 79 level, and then I will run my take profit up onto the former swing low. Okay, I'll run my take profit up to the former swing low. So with this, you can be catching 1:3, 1:5, 1:7, and you can be reducing your risk while because you're understanding market structure. Mine, oh mine, oh mine. Should I show you? Now, this is the same thing for a bullish structure. This is the same thing for a bullish structure. Whether a bearish structure or a bullish structure, this is exactly the same thing that happens, except for a choppy market. Because there are other strategies for trading a choppy market. Okay, already we've used 33 minutes of our time. I'm not going to exceed 1 hour. I am happy that you guys are still learning something. So, but I'm not going to exceed more than 1 hour. So if I can't exhaust what I have for you today, it simply means that we will continue next week Friday, because it's every week something now. In fact, even if we do, see, listen guys, even if we dwell one whole month to understand market structure, trust me, it is worth it. Okay, trust me, if we spend one whole month every Friday for 5 Fridays to understand market structure, it is worth it, because it is the basics and one of the most important concepts and things that you should learn as a trader to become a profitable trader. All right, now let me just quickly show you an example on a live chart. Okay, let me quickly show you an example on a live chart so that you know that this thing I'm showing you, man, is no joke. This thing is real. Okay, it's real, it's real, it's real. Beautiful. All right, now let's quickly look at this now. This is on the daily time frame, okay? And this is Euro AUD. This is Euro AUD, okay? This is Euro AUD. Now, watch. I can see an impulsive move, a corrective move, and a continuation. For those of you that attended last class, I told you how reversals mostly occurs, okay? Reversals, how they mostly occur on those failure zones, all right? There would most times, it will create an impulsive move in the opposite direction of the prevailing trend, then create a corrective move. That corrective move is going to close lower or higher, depending on the direction you're looking at, and then the continuation. Most times we trade a continuation. So now watch. So this created an impulsive move. The whole of this place is an impulsive move. Okay, the whole of this place, this is an impulsive move, and then it created what? A corrective move here. Okay, it created a corrective move, and we want to trade this continuation. But by the way, when it created this, how would we know that this area is the best area for us to take a sell? How would we know? How would we know? Let us put what we just learned into practice. Are you ready? Now let us look. I've not even seen it before. I can go on and on with so many other charts. It happens every time. You just don't see it. Okay, I'm going to pick my Fibonacci retracement tool, and I'm going to place it from this top A, and I'll drag it all the way down to top what? B. Can you see this now? I'll drag it all the way down to the bottom B. I'm coming. All right, I'm going to take it from top A, and I'm going to drag it all the way down towards the bottom B. Now, what happened? Remember what I told you. I told you that most times the market will retrace where? Into the 61.8 level. But if it goes above 61.8 level, so long as it has not exceeded 79% level, it is still what? Valid. So most times some people place their entry exactly at 61.8% level, but sometimes me, I'm scared. I don't want to do that because I want to always find confirmation. But placing your entry exactly at 61.8% level most times also works. Okay, most times it also works. But for me, I like to be extremely careful. So I like prices to come into that zone, find confirmation whether 61.8 or not. Now, what happened? Guys, can you see what I'm just seeing? Price came, tapped exactly at 61.8% level. Can you see this here? Can you see this here? Price came, tapped exactly into the 61.8% level, and what happened? Price all the way just decided to go down. Come in. Beautiful. Now, can you see this, guys? Can you see now that if I had seen this retracement happen, if I have seen this retracement happen, and I know that this is a fake, in fact, how would I know? In fact, there are too many things for me to know. I can't teach everything, guys, today. This is a higher high here. Let me show you. I would even know. It's very simple to know. This is higher low, higher low, higher low. Can you see this? But the next low that was created became what? The next low that was created became a lower low. It simply means that this is an impulsive move. The market is about to do something funny. It was supposed to obey this structure by creating what? Higher low, but it created a lower low. So I already know by default. I already know by default that this guy is about to do something now. Okay, I already know by default because of his behavior. He was supposed to continue the bullish structure, but he failed to continue the bullish structure. Instead, he created a lower high, a lower low. Why would he create a lower low? Is it his clansman? It's not his clansman. Okay, he's not in the same category. He's not in the same clan. The same clan people will continue that generational trend. Higher low, higher low. But this guy decided to create a lower low. So in my head, I'm thinking, could this be a failure swing point? All right. Now let me experience the depth of retracement. After falling all the way from this top here to this bottom here, what is the depth of retracement? Fibonacci will tell me. And Fibonacci told me exactly 61.8. Market tap, and all the way down. So if I am to take my price, if I'm to take my sell trade, what would I do? What would I do? If I'm to take my sell trade, like I told you, what I will simply do is I'll place my entry here. My stop loss is going to be a little above My stop loss is going to be a little, just a little above the 79% level, and I'm going to take my profit to where? The bottom. Okay, I'm going to take my profit to this last swing point. Did you see how we smashed take profit with a sniper entry? Guys, this is happening all the time. This is happening all the time. Just one more example and we will leave. This is USD JPY. Okay, come up. Let me show you guys this stuff and then we go. Now, those of you that have been following my analysis I posted on USD JPY, I believe you watched the analysis on the YouTube video, right? This is exact same thing, exact same knowledge I had that I knew for certain. Let me show you first. I will show you two things here. Very amazing. So price was going all the way up, creating higher highs, higher lows, higher highs, higher lows, higher high, higher low, higher high. Can you see that? Higher high. Well, what happened? This guy now decided to create a lower low from this top to this point here. He decided to create a what? A lower low, lower than the previous low. So I knew in my head that this is an impulsive move. This is an impulsive move. I don't need anybody to tell me this is an impulsive move. So I'll be looking for the depth of correction, which is using what? The Fibonacci retracement tool. So I'll pick my Fibonacci retracement tool and I'll place it from this top here, top A, and then I'll stretch it down to top what? B. And then what am I looking for? I am looking for that area where the retracement will come into. Did I say 61.8 to 79? Did I say that? Now, can you find the fact that this retraced into the 61.8 level? And what is happening? It's coming all the way down. Can you see that? It's coming all the way down. So where will it come back to? This bottom at least. It will go below this. But let us be conservative. It is coming back to this swing B. Okay? Now, do you see why I drew my take profit all the way down to this level? Will this happen? It's already playing out. Can you see this? It's already playing out. It taps into that 61.8% level, and then it's already playing out. Now, give it more 1 month. All right. The coming weeks, you will see this will nicely play out until it will come back to this level. If you are getting value, type in that comment section value. If you're getting value, type in that comment section value. Type in that comment section value. As you're typing value, if you're yet to sign up on account with equity, please do so. Okay. Now, let me still show you a few more things. When prices got to this level and we took it down, of course, on the smaller time frames, the same things will be repeating itself. Now, don't forget, this bullish retracement that we saw on the weekly time frame actually created some sort of a trend. Okay, what was that sort of a trend? It created a bullish structure. But although it was what? It was not really originally a bullish structure. It's just a retracement. Okay, but now let us say that on the smaller time frame, it is a structure on its own. And then, of course, we've known where it came to end and why it is going down. But of course, creating a bullish structure, you see higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, another higher high, right? What were we expecting? A higher low and price to continue. Is it not true? Now, what happened? Price, instead of creating another higher low, it created a lower low. Can you see this now? This is the point. It created a lower low, lower than the previous one. This was the previous one. This was the previous swing low. Okay? I'm coming. This was the previous swing low. Now, what did price do? Instead of price to create a swing point that should be higher, it created a swing point that is lower. So in my head again, I am thinking this guy is about to do some magic. So when price begins to take off from here, I know that already this is a change of structure, okay? Change of character. SMC traders will call it choke, change of character. So once this happens, I already know that it simply means that this bullish movement is about to be defiled. And I am ready to defile that structure. Do you understand? Now, what will happen? For us to know where these prices will retrace into before it will continue to fall below, what are we going to do again? Collect your Fibonacci. Pick your Fibonacci tool, place it at this top here, and stretch it all the way down to the bottom. Okay? When you stretch it all the way down to the bottom, where did we say we are expecting prices to come into? We said we are expecting prices to come into the 61.8 level. Okay, can you see that price came very close to the 61.8 level and began to fall? Can you see that? Now, for those of you that watched this particular analysis on the YouTube page, on this our YouTube page, the video is still there and the analysis is still very much valid. I gave you 2 entry points because I had to refine the entry, not just using Fibonacci retracement, but I had to use some other more refined concepts like the fair value gap or the imbalance. So I had to look for imbalances, okay? And the both imbalances that I found, are within the 50% to 79% retracement level, which was good for me. But specifically, specifically, I was expecting price to come into between 61.8 to 79% level. That's why I gave you entry level 1 and I gave you entry level what 2. But I told you in all, find confirmation to what enter the market within this level. So what's the entry level 1? This point here. All right, this is between the 50 to what 61.8 retracement level. And of course, you know how we do it. Just simply place your risk to reward tool here. Your stop loss should be a little above, and you're stretching it all the way to that down part. Remember that down part I told you? You're stretching it all the way to that part. Don't be scared. See, this thing is something that I said, what is structure again? Can somebody remind me what structure is? Please remind me again what structure is. 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 In the comment section, please remind me again. I said a structure is behavioral pattern. Once a behavioral pattern exists, it will continue. See, listen, this market, there is nothing new that is going to be happening here. There's nothing new. Everything that is happening here has happened before. So we study it, we study the pattern, and we flow with the pattern. That is market structure. So once you understand this, you are very close to becoming a consistently profitable trader. The way you look at the market is, you just look at the market, and when you see prices will be dancing up and down, you will just be calm and say, okay, when you finish dancing, right, come into my zone, come into my zone. Once I catch you in my zone, I find that confirmation, I go all the way. Okay, so that's how beautiful this is. Okay, so how many minutes do we have left? We have only 14 more minutes. 14 more minutes. 14 more minutes. Can I do something? Can I do something? Can I do something? Or should we leave the next ones? I think this is more than enough for us to take home. This is more than enough for us to take home. Maybe I'll just show you one more example. I will call it a day. It simply means that what I initially intended for us to do today, we did not do. Okay, let me show you another one. Still on the matter. Okay, still on this matter. Let me show you another one. Okay, let me show you another one. So watch these, guys. Watch this. So here, this was when we had the first change of character. Okay, can you see this now? This whole movement from this point here to this point here. This is when we had the first change of character on the bigger picture. I mean on the bigger picture, what I showed you on the weekly time frame. Okay. Who is saying? Somebody is saying 30 more minutes. You're not serious. You guys are not serious. Once it is 12 noon, I'm ending this class, whether you like it or not. Once it is 12 noon, Tonye George, I am ending this class. All right, but please don't leave yet. Don't leave yet. Okay, don't leave yet. I have a very great and important news for you guys by the end of this class. Something very big for you. Something very, very big for you. Okay, by the end of this class. So don't leave yet. Okay. So let's go ahead. So price was actually moving all the way up, and then we had this change of character. Like I explained before, price, this was the last swing high. Okay. Oh my God. I'm coming. Beautiful. So this was the last swing high. Okay. Why? Stop this. This was the last swing high. And then, of course, the next major swing high, maybe this one, just maybe this one, okay? This next major swing high was supposed to be what? Higher than this. But apparently, it went ahead to create a swing high, a swing low that was what? Lower than this. So we already know that, look, this guy is about to do what? To change structure. This guy is about to change structure. So let us go again with our concept. It's very simple, oh. It's very simple. Don't mind me. Forex is very simple. When you understand what you're doing, Sha. Forex is very simple. So once he created a lower high, okay, and then of course, apparently he began this retracement journey, okay. Now, this, when it was coming down, it was creating lower highs, lower high, lower low, lower high again, lower lows, okay, lower lows, lower highs, lower lows, lower highs, lower lows, okay. We were expecting another lower high, which is this one, another lower low, but it failed to create another lower low. Can you see that now? Because it failed to create another lower low, it simply means this market most likely will be going up. And then, of course, finally, we got to this point. Now, it started retracing. Apparently, this point that this price got to, okay? Apparently, this price at this level that price got to, okay? I'm coming. Holy God. Okay, apparently this level is what? Is higher than this other level here. Remember, this was the last major swing low, the swing high that was created. So if this market was supposed to continue to go down, it was supposed to continue to create what? Lower highs and lower lows, because that is its behavioral pattern. But what happened? It went ahead to create a high that was higher than this one. It simply means that the behavioral pattern has changed. We should look in the next direction. So what happened? This market created this from point A to point B and began to retrace. Now, I want to follow in this pattern because remember, the pattern, the trend has changed. The pattern, the structure has changed. Because what? It created a high. It created a high higher than the previous what? High. So it simply means this bearish structure fails to hold. So I'm going to be looking at buy opportunity because a bullish structure is now about going up. So how would I know this depth of retracement so that I can take a sniper entry and go all the way up? How would I know? It's very simple, guys. I'll still pick my Fibonacci. One of my senior colleagues. One of my senior colleagues will call it Fibonacci. One of my very good senior colleague. I learned a lot from him as well. All right, so I'll take it and I'll drag it all the way to this top here. Can you see? I'm dragging it all the way to that top. I'm dragging it all the way to that top. So I want to know the depth of retracement so that I can find opportunities for buy. What happened? You see that prices retraced where? Where did prices retrace into? The 61.8 to 79% level. Can you see this here? Amazing, guys. Amazing. Amazing. Price just, this is the movement. I know that this is a change of structure, but I want to know the depth of retracement so that I can take this bullish ride. So what did price do? Price retraced into this level. I will look for my confirmation. I'm not teaching about confirmation today. Okay. I will finish everything about market structure before we come back to confirmations. That might take 2 months. So you have to do business with us. You have to fund your account, remain on the platform if you want to be getting this amazing knowledge. Okay, so what would I do now? What would I do? It's very simple, guys. Very, very simple. I'll pick my risk to reward tool, and of course, I'll place it here. Once I get a confirmation, my stop loss should be just below. Coming. Okay. So my stop loss will be just below the 79% level. Okay. And my take profit will be all the way to this top where this market started falling from. This will give you a nice 1:5 risk to reward. Very nice. 1:5. 1:5 risk to reward. Can you see this now? Was the top take profit smashed? Very minimal risk, but very high reward. Very minimal risk, but very high reward. My God, my God, my God. This is simply amazing. Anywhere you want to see this, this happens literally all the time. This happens literally all the time. Okay, so we have only 6 minutes left. But has this session been impactful? Have you learned something? If you got value for the 1 hour you've spent with me, please type in that comment section value. See, listen, guys. I wrote a lot of things to come and show you guys. Look at my book. Can you see my book? I wrote a lot of things that I want to come and show you guys on market structure. You see, you can never find it anywhere. Go to YouTube. I know most of you are very big. Most of you are very big, big fan of YouTube. Every time you just rush, you go to YouTube. You cannot find, guys. I'm teaching you from my wealth of experience, not from book I read. So you cannot find. See, I've not touched one. I wrote 10 things. 10 things. I wanted to show you 5 today. I've not even touched one out of the 5. I just showed you. I just felt like making a recap and showing you this. Remember, I mentioned 2 ways that I used to know how markets. I mentioned 2 ways that I used to know the depth of retracement, and that exact same point where I will take my trade. Right? I just showed you only one, Fibonacci. I've not even showed you the second one. So you can see that. So you can see that the things are just too many. Here, not on YouTube. Here is here, not on YouTube. Okay, so this is just one out of the 2 ways. If I show you the second one again, you guys will even you go wild. You want to shout. Say, is this the forex? The same forex I've been doing. So let me not show you that one. Okay, let me let me hold that one for myself. Okay, let me hold that one for myself. Let me hold that one for myself. Maybe in the future time, you might be lucky, I will tell you. Or if you people remind me, okay? In fact, everybody remind me, okay? Everybody take it upon yourself to remind me to show you the second one, okay? Remind me to show you the second one. Let me also pen it down so that I would not forget what I was thinking to tell you. So remind me, if you remind me, maybe next week Friday. So guys, we've come to the end of today's class. Next week Friday is going to be NFP. You know how we do it. We always trade NFP. We are not scared of NFP. When people are saying, if there's high impact news, so leave the market, you know, that's how you know how we do it now. You know how we do it. When people say there is high impact news, leave the market, that is when we want to enter the market and we want to trade. We want to trade. Okay. So next week Friday, 1 p.m., yeah, we're going to be trading NFP. NFP will be held on Zoom, not on YouTube. So the link to join that NFP session, live trading session, will be given to you by your account manager. So I need you to go back to your account manager and ask your account manager for the link. Okay. Hopefully the link will be out hopefully by Monday. But latest today, the link will be out before close of business today. Meet your account manager and ask your account manager for the link. And before you're meeting your account manager, ensure to have funded minimum of $200. So this month rather, July session of NFP, I told you that I want to be giving out my NFP profits on a $500 account I funded specifically for you guys. Okay, I funded that account for you guys, and I said I was going to give out 50% of my profits from that account. Apparently, the profit was small on that account because I never wanted to over-risk the account. It's not your money, it's my money. So I never wanted to over-risk it. So I took about, was it about $20-something or so? But I made it 20,000 naira after converting. It was around 14,000 or 15,000 naira about. I said, okay, 20,000 naira, and I want to give 10,000 naira each to 2 people, which is the 20,000 naira. I ended up giving only 1 person because the condition was that before you are asking for the link to participate and become a lucky winner, ensure to have a minimum of $200 funded in your equity account. That is what will qualify you to get that money. Okay. So when I looked at it, of all the 40-something names that I kept spinning and I kept calling, nobody had up to that $200 funded. Everybody was funding $100. So I was like, what kind of, I was really angry. I was pissed, to be honest. I was pissed to my bones. So I gave only one person 10,000 naira, and the other persons that did not meet the criteria did not get my gift. But you know how we do it? This NFP, we're going to do it again. I'm not going to give you my profit this time around. I want to flip my account this month NFP. August NFP, I want to flip a $500 account. So I'm not giving you a dime. I will not do giveaway either. What you will do for yourself is please fund your account and let us trade NFP. So meet your account manager and request for the link from your account manager. And secondly, I want to show you just one last thing before we go. You know GBP trade that I have stocks to buy, okay? Some of you might be scared because as of yesterday, he gave us so much profit, but today is having a drawdown, all right? I don't need you to be scared, okay? This is also one of the things that I wanted to show you today. This is also one of the things that I wanted to also teach you. I wanted to teach you today. So look at this. First, let's look at this on the weekly time frame so that we'll know. Now on the weekly time frame, no, maybe on the monthly time frame. Please, let me just make this analysis and then we go. I know I've exceeded my time. This is 12 noon already. Let's look at it on the monthly time frame so that you understand the structure and what is really happening here. So on the monthly time frame, what we can find is more like a bullish structure. You can see that price moved up and then came back below here and then is apparently going up. So even if we use the Fibonacci concepts that we've learned today, from this point A, we move it all the way to point B, right? We move it all the way to point B. I'm coming. Okay. What do we see? We see a retracement. Okay, into about the 50% Fibonacci retracement level. Can you see that? Now, not only that, we see a retracement into the 50% Fibonacci retracement level. There is a valid trend line here. Okay, there is a valid trend line here. What is that valid trend line? Okay, there is a major swing point here, another major swing point here. So touching this trend line will touch here and will also touch here. It simply means that this price is also about to go up. Okay, now not only that, scale down to the lower time frame, which is the weekly time frame. I want to just quickly show you this and clarify there before we continue. Okay, now on the weekly time frame as well, what we can see is something that is most likely forming what we call the W-shaped pattern. So let me draw that out for you. So prices move into this trend line and then move back up and then this. And so we're expecting prices to continue to move up. Okay. So this is what we call the, sorry about that. This is what we call the W pattern. Okay, the W pattern. So already in my head, I'm looking at, if this trend line is not broken, this is the pattern that we hold. Do you understand what I'm saying now? If this trend line is not broken, then this is the pattern that we hold. Or maybe we can even most likely draw it here like this. So if this is not broken, then this is the pattern that will most likely hold, a W-shaped pattern, which is more like what? A double bottom. Remember, double bottom can be formed in so many ways. We have equal bottoms, okay? For those of you, I'm still giving much value now. I'm making analysis, I'm still giving value, okay? We can have this, or we can have equal bottoms, or we can have slanted bottom. Okay, can have something like this. Okay, or we can have the other one, which is something like this. Can you see this? So all these are double bottom patterns. It depends on how it is being done. It's either it is double bottom, okay, or it is what? A slanted bottom on a trend line, or even this one. Okay, so either of all these are W-shaped patterns. Okay, either of all these, they are all W-shaped patterns. Whether this or this or this, they are all W-shaped patterns, and they are all very much what? Valid. Okay, they are all very much valid. Now, let me show you what is happening. Let me show you what is happening here. Like I said, if this trend line is not broken, it simply means that this W-shaped pattern is also very much valid. This is the pattern I drew for the last one. Okay, now not only that, I want to show you some more things. Okay, I want to show you some more things. I'm coming. Let's go to the daily time frame. I want to show you some more things. Now, on the daily time frame, while I am saying that this is going to go bullish, okay, while I'm saying that this is going to go bullish, is because apparently this was creating lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. This was the last previous high. Okay, this was the last previous high here. Okay, so this was the last previous high here. And then what happened? We were expecting that, okay, now that it has created this, we're expecting the next high to be lower, but the next high became what? Higher. So it simply means this is a change of character. Okay, in fact, if you don't use that as well, you can also use this level here. Okay, this is another level that creates head higher. So what do? As always, we will be checking out for what? Our Fibonacci. Okay, so since there is a change of character, it simply means this is about to go bullish, is it not? Now I can use my Fibonacci retracement tool. Place it below here, and drag it all the way to the top here. Can you see that now? I place my Fibonacci retracement tool, drag it all the way to this top. And by the time I drag it all the way to the top, what am I seeing? A retracement into the 61.8 to 79% retracement level. And that level is where apparently we are going to be finding the best entry setups for us to go bullish. Okay, so on that level we will be watching out, and of course if we find confirmation on that level, we will be taking all the way to the upside. So what would I use? I'll still use my risk to reward, and then I'll place it here. All right, I'll place it here. My stop loss is going to be is going to be slightly below the 79% level. I told you that, right? And then this will be dragged all the way to the top. So this is going to be my setup. Beautiful. Let me take this out now. So this is going to apparently be my setup. So what I'm just looking out for here is confirmation. So you see that this is still within the scope of things. This is still within the scope of things for our buy bias. All right. Now, not only that, I will not only show you that, I am also noticing what we call the inverted head and shoulder pattern. The inverted head and shoulder pattern. How does the inverted head and shoulder pattern happen? It's one of the things I wanted to show you today. Okay, I wanted to show you the head and shoulder patterns, still part of market structure. Now, the inverted head and shoulder patterns happens like this. Prices come down, okay? Prices come down, create a swing low, and then create another swing high. Then that will be more like an inducement for SMC traders, and then create clear liquidity by creating a high, come back again to that same level, and then come back here, all right, and then create a left shoulder, another inducement, and go all the way to the top. So this is apparently what we call what? This is what we call the inverted head and shoulder. Now, why is it the inverted head and shoulder? This particular area here is the left shoulder, okay? That's the left shoulder. Then we have the head, okay? And then we have the what? The right shoulder. Can you see that? Not only that, we then have what we call the neckline. So this is the neckline, okay? I wanted to really show you guys all of this today, but time did not permit us. So we have this. This is a bullish reversal pattern. This is what? A bullish reversal pattern, bullish reversal pattern, where we see inverted head and shoulder, and then prices begin to go up. And from the look of things, this is exactly what we see playing out already in the market. This is exactly what we see playing out in the market. So let me just show you guys. So we see prices come all the way from this top here, okay, create this shoulder, okay, induce, create liquidity. There is also a confirmation on that liquidity cleared, then come back again to that top, left shoulder, all the way to the top. Can you see this now? Can you see this now? So this is an inverted head and shoulder pattern. So what I was just expecting is for price to show me some more confirmations around this zone. And of course, I'm already on the trade for a buy. As of this morning, I was already raking in about $50 on the smallest account that I have. Then all of a sudden, today became a bearish day. But I'm not worried. I'm not worried. Okay, because this is still within the scope of things. Okay, this is still within the scope of things. The highest I'll do is I'll just move my stop loss just a bit, and then I still have a nice risk to reward of 1:6. Okay, sorry, I still have a nice risk to reward of 1:6. It simply means even if I'm losing, say, $20 on this trade, it's worth it. But if it plays out as analyzed, that $20 on a single trade, I'll be eating $120. So if in total I'm risking about, say, $50 on this trade. All right, 1:6, I'm expecting a $300 profit on this trade. That is on my small account. Now, other accounts that are big, okay, that I can risk up to $200 simply means I'll be raking in about $1,200 on this trade. And of course, you know how we do it. Once everything is set, I see that this is a confirmation that price is obeying what I want to see. I'm going to add more positions to it. But until then, this is still valid for a buy. I said, let me just show this to you guys. So if this was making sense, thank you so much for attending the class. Let me read a few comments. Is it the Fibonacci that shows the risk to reward? I don't use Fibonacci to show risk to reward. There's a risk to reward tool on the trading view. All right. That's an answer to Nathan Uzegbu. Anthony said impactful 20 minutes. Thank you so very much. Uche. All right, so I'm responding to all the questions. Said Godwin Danladi said this class is sweet, boss. Thank you so much, Godwin. Anthony said we can go until 3 p.m. Favor Udo Ekong said, I love you. My 6 months old will grow up with you and learn from you. Whoa! All right, Spencer said, this is the bomb. I learned so much here. I just learned how to use the Fibonacci. Saya, gifted with wisdom. More grace. Thank you so much. Thank you, Glorious. What time frame is good to use the Fibonacci retracement level? Fibonacci retracement level can be used on all time frames, okay? Fibonacci retracement tool can be used on all time frames, But most times when I do my analysis, on a higher time frame, okay? I do my analysis on a higher time frame. That is the 4-hourly upward to daily time frame and also to the weekly time frame. The truth is that if you make your analysis on a higher time frame, you have lesser chances of making bigger mistakes, okay? Because already you understand the structure on the higher time frame, and then you position yourself rightly to take on those trades, okay? So you make less mistakes taking trades, making your analysis rather on the higher time frame, all right? Okay. Regina Steven said value. Thank you so much, Regina. Regina has been consistent with all of our classes for the past 1 month. Thank you so much. Honestly, 1 hour is not enough for this class. You have to do something to increase the time. And Anthony, you can't be serious. Mr. Anthony, you can't be serious. Go ahead and show us. We're ready to go on with you till 3 p.m. We started class 11 a.m. and you want me to go until 3 p.m. Guys, you guys need to let me go. Whoa, Joel Kereti is watching all the way from Uganda. All the way from Uganda, Joel is watching. Thank you, Joel, for joining us. Thank you so much. Thank you, everyone, for joining in. Okay, thank you so much. Somebody's reminding me again that I'm a civil engineer. Please, oh. All right, guys. So thank you so much for joining in. Next week, Friday, again, we're going to go deeper. I promise you, if you miss next week, Friday, you're going to miss a whole lot that I want to show you. So don't miss out, okay? I want to show you some deeper things, still trading market structure, understanding market structure. And please do well to get your accounts funded, all right? And trade with Equity, your number one broker today. Thank you so much for staying up with me till this time, and bye for now.